By the end of last week, it seemed a near certainty that the Bank of England would be raising rates in their December meeting. As we explained in our videos last week, we had the comments from Andrew Bailey and some other members of the MPC at the House of Commons. We had the high inflation data, and we had the jobs numbers that seemed to be on track. Then, over the weekend, they decided to throw a spanner into the works. Andrew Bailey, the Governor of the Bank of England, was interviewed in the Sunday Times, a UK newspaper, and his comments suggested that they're still very hesitant, and he was kind of downplaying the whole thing. He said, A, activity in the economy is slowing. B, the proximate cause of many of these inflation issues is on the supply side, and monetary policy isn't going to solve these directly. It doesn't get more gas, more computer chips, more lorry drivers. And C, however, the concern for us is what they classically call second round effects, particularly in wage bargaining and the labour market. If the economy evolves in the way the forecasts and reports suggest, we'll have to raise rates. He did also point out that the risks to the bank's forecast were now two-sided. So I guess we can all thank the Governor of the Bank of England for the revelation that inflation can in fact move up or down. It seems the only thing he is certain about right now is that he isn't the unreliable boyfriend. But I'm definitely not as sure as he is on that one. In a double whammy, we also had comments from Hugh Pill, the chief economist of the Bank of England, on Friday. He said he still genuinely doesn't know which way he'll vote on the rate hike in December, and made the same comment about risks being two-sided, as if we didn't already know. He said, I came to the bank thinking the recovery is well established, there's momentum in the economy, inflationary pressures are building. The burden of proof perhaps a little bit is in the other direction. So now I'm looking for reasons for it not to happen rather than reasons to happen. So does this change your opinion at all? We had some interesting comments on the Bank of England video last week, and it seems that people are thinking a rate hike is coming in December. So let me know in the comments if you still think this is the case, or if this dilly-dallying from the governor is making you think otherwise. And please also hit the thumbs up button to support the channel. Now, in terms of this coming week, we'll be keeping an eye on the PMI data that's out on Tuesday. The IHS Market PMI showed unexpected upwards momentum in October, but this is likely to decelerate in the latest readings. Services PMI is expected to drop to 58.5, which would be down from 59.1 last month. However, if the data beats expectations, that could increase speculation that there'll be a rate rise in December, since the Bank of England are clearly worried about economic growth. For markets, I'm looking at possible long opportunities on pound dollar. We pushed back above that previous swing high on the daily chart. Even though we gapped down for the start of this week, which is a bit of a bearish sign, the path of resistance is still strongly below the price, and the better trade seems to be looking to pick up intraday higher lows to continue this bullish leg of the wave that we just started that you can see there on the daily chart. But anyway, that's all for now. We also have updates on two other major central banks today with the ECB and the Federal Reserve, so keep an eye out for those videos and subscribe if you haven't already. I'll see you in the next one. Thanks for watching.